My name is Sam Bazini, CEO and co-founder of Warpaint London PLC. At Warpaint, we produce affordable, high-quality, on-trend colour cosmetics under several of our own brands. We employ 140 people worldwide. We have 177,000 square foot of warehouse and office space in the UK, as well as offices in the US, Hong Kong, and China. The office in the US is used primarily for sales into the world's largest cosmetic market, and the offices in China and Hong Kong are used for sourcing our products and for quality control. We outsource all our manufacturing and we use multiple factories. This ensures the best price, the best quality, and the best service. And if we don't like the price, the quality, or the service we're getting, we can move factories very easily, and we have done in the past. Warpaint is profitable, we're cash generative, we've got a strong balance sheet, we're debt free, and we're dividend paying. 2023 financial highlights. We announced our results this morning. 2023 was a record year for Warpaint. Revenues of 89.6 million against 64.1 million in 2022, 40% up. Our gross margin also increased to 39.9% from 36.4% in 2022. PBT for 2023 was 18.1 million against 7.7 million in 2022, and cash in the bank was 9.1 million at year end against 5.9 million at the end of 2022. Also worth mentioning, the final dividend of 6p, total for 2023 was 9 pence against 2022, 7.1p. 2024 first quarter trading update. The strong trading has continued into 2024. We've had a record start to the year, 23.5 million in revenues against 18.4 million in 2023. The first quarter, 28% up on the same period. The gross margin, I'm pleased to say, has continued to grow. The main driver of this is we're resourcing all our existing products to get better prices without compromising quality, and also new product development, where we start with a sort of a blank canvas, if you like, and we're able to set the margin on any new products we produce, and we're also able to grow the margin a little bit as our brand recognition grows. Our expansion strategy continues. We've agreed an initial range of W7 and Chit Chat products going into Walmart later in the year. And we've also launched our Technic brand into 202 Morrison stores, as well as launching into new retailers. We've also expanded in our additional retailers, CVS, Boots, Five Below, and Superdrug, with not just more stores, but also more space within those stores. E-commerce, our direct line sales also continued to grow in the first quarter of 2024, with 41% up on the same period as last year. Outlook, given the strong start to the year, we're confident we can continue to grow the business for the remainder of this year and beyond. As I say, our results were out today. The house broker issued a new note, and he upgraded his forecast for Warpaint for 2024. He expects revenues of 105 million with an adjusted PBT of 23.3 million. We're very comfortable with this number. A strong value proposition. This slide sums up our lead brand, W7. We're not trendsetters, we're followers of fashion. And our new product development department follow the prestige brands very closely. And if anything interesting or innovative comes onto the market, we try and get the W7 version out within 3 to 6 months. And the W7 version will be similar in look and in quality. These inspired products, or dupes that they're known in the trade, represent about 30% of what we do. The rest is core, our own sort of product development, a red lipstick, a red nail polish, a black mascara. But the 30% these dupes, as we call them, are what create the buzz and interest around the brand. And below on this slide are some examples. I'll point you to the one in the middle, Huda Beauty. It's an eyeshadow palette that was made famous by a famous influencer. This is the prestige version at £62. And next to it is the W7 version, Socialite, retailing at £9.95. Similar in both look and just as importantly, quality. And when we go and see buyers, we use this slide along with samples of the W7 versions and the prestige versions to explain the concept of the brand. And the buyers just love it. It's something different. Once it's on shelf, the consumer immediately understands the proposition. They understand the value that they're getting. They understand the look they're getting because they've been reading about it on social media for the last 3 to 6 months. This is just some market data we purchased from Mintel, and I really put it in just to try and explain the potential we have in the US market and the similarities between the US and the UK market. So if you look at the left, the UK market currently is approximately 1.8 billion in colour cosmetics. The US market is 18 billion. It's 10 times the size. In 2023, we did approximately £33 million worth of business in the UK. So the potential is obvious. If we could do 10 times as much in the US, we'd be 330 million. And I don't see why we shouldn't be able to do that eventually. If you look at the UK market, some of the similarities, 2/3 of women use colour cosmetics daily or a few times a week. In the US, it's the same number. In the UK, 79% think the price of a product is an important criteria. In the US, it's 68%. We're an affordable brand. We're in a cost of living crisis. So we're well placed to take advantage of this. In the UK, 67% think an affordable brand performs as well as prestige brands. And in the US, it's even more. It's 74%. So if you, as I mentioned earlier, we mimic the prestige brands. We make a good quality product. So looking at all the data, I believe Warpaint meet all the criteria to be able to succeed in the US as we've succeeded in the UK. Strategy, which we split up into 6 pillars. The first pillar, develop and build our core brands. We focus on 5 brands. The first brand, W7, our lead brand, I've already explained, is an affordable, young, on-trend colour cosmetic brand for a 15 to 30-year-old demographic. Technic is an affordable, everyday, what I would call essential cosmetic brand. Services a wider demographic of 25-year-olds to 45-year-olds. We've got Body Collection, more focused on skincare and premium packaging for an older demographic. We've got a men's toiletry brand, Man Stuff, doing shaving foams and shower gels. And finally, we've got Chit Chat, a pre-teen colour cosmetic brand. We like to say where the fun begins. All these brands do something different. They don't cannibalise each other. We don't allow the amount of SKUs we produce to proliferate out of control. We keep a very tight rein on what we're producing. And this is we're building brand equity across all the brands because we focus on them. And this is helping us grow the margin and profitability across the business. Develop and nurture current business. This is all about growing and protecting our existing customer base. There's no point in acquiring new retailers such as Tesco, Boots, Superdrug, CVS, as we have in the last few years if we don't look after what we have. So we're very focused on looking after our existing customers. In the first quarter, up 28%, and the lion's share is from existing customers. There's been no major pipe fills in the first quarter of 2024. Grow market share in the UK. This is what I like to call our 75% strategy. Our business grew up in the discount sector in the likes of B&M, TK Maxx, Savers. This only represents 25% of the UK colour cosmetic market. It leaves another 75% of the larger retailers: Tesco's, Boots, Superdrug and Morrison's, these type of retailers. The first major retailer we landed was Tesco in 2020. We went into 50 stores. We're now in over 1,400 stores, and we've used all the success and learnings from this experience to open doors into other large retailers, some of which are listed on this slide. Boots, Superdrug, we've just announced this morning we're going into 200 Morrison stores. Grow US and China market share. In the US, we have a much tighter range of product. We sell our 200 best-selling hero lines. We use third-party logistics in the US, so it's very important we don't have slow-moving stock there. It gets very, very expensive if the stock is sitting and being stored in warehouses. In the US, like the UK, we target the larger retailers, and in the last couple of years, we've opened retailers such as Five Below that have got in excess of 1,600 stores, CVS, Kroger, HEB, and later this year we're launching our W7 and Chit Chat brands into Walmart, which has been a target of ours for some time. In China, we sell directly to consumers online. We use platforms such as Tmall and Red, sort of Amazon equivalents in China. We manufacture in China. We have a business there, a proper entity with staff, which is not an easy thing to do. We register our products in China. We deliver them to a fulfillment house, and we use a customer services to find us KOLs, key opinion leaders and influencers to promote our brand. And this is all overseen by the staff that we have in China. The business is growing steadily and profitably. Grow online sales. In 2019, we decided we would focus and grow our online sales. Up until that time, we just used our website as a marketing tool. So the first thing we did was we stopped supplying resellers that were sort of ruining the brand online. And the result was in 2019, we did £180,000 worth of turnover. And last year in 2023, we were up to 6.2 million. In the UK, we sell online on our own website and Amazon. And in the US and Europe, we sell on Amazon, solely on Amazon. We have no infrastructure in the US and in Europe, so Amazon is the best option for us. They operate something called small and light. We can't compete with their delivery charges, so it works for us. We're often asked, can we be profitable with all the commissions and the delivery charges that we pay to Amazon? The answer is we are profitable. We make a similar PBT margin to the rest of the business, which is about 20%. Obviously, the gross margin is higher. We're also asked, could we grow faster? Yes, we could grow the business a lot faster, but we're really not interested in burning cash online. We've seen our peers do it and online businesses do it. Everything we do in this business is geared to making a profit. We came to the market saying we'd be profitable and dividend paying, so that's what we try and do in every part of our business. Finally, our last pillar, ESG, environmental social governance, something that we take very seriously. It's important to our customers, consumers and investors. We're doing a number of things, reducing air travel. We're vegan and paraben free on all new products, and any existing products that we reorder, we reformulate. We're reducing plastic packaging where possible. And we've been working with a company called Planet Mark since 2022, have received certification from them. And they've put in place a strategy to reduce and monitor our carbon footprint. These are just some of the things we're doing, and full details can be found on the Warpaint London PLC website. This is a question we get asked a lot. What is the growth opportunity within the stores you are in? So in the UK, we have 20 key customers. We're currently in 6,100 of the stores. There are 13,000 stores in total across these customers. So there's a further potential of 6,900 stores. In the US, we have 12 key customers. We're currently in 6,700 of the stores. Total amount of stores is 24,200. potential of 17,500 further doors in the US. And in the EU, we have 9 key customers. We're currently in 2,300 doors, total stores 7,200. There's a potential of another 4,900 stores in Europe. So if you add all this up, the potential growth in the retailers we currently supply could give us another 29,300 doors. There's plenty of room for growth across these 3 major geographies. Finally, why invest in Warpaint? Record sales and profit in 2023, planned launches in 2024 into new retailers, as well as further expansion into existing retailers. We've got a profitable e-commerce business and a strategy to grow it further. And for me, one of the most compelling parts of the summary is Warpaint are part of a small group of AIM-listed companies that are profitable. We've got a strong balance sheet, dividend paying, cash generative, and we've got absolutely no debt, not even a photocopier on lease. Thank you. Any questions?
Terrific, Sam. Thank you very much indeed. Thank you very much indeed for the presentation, and congratulations on the figures. First question is about your the different brands. Do you have space for any more? Do you feel as though you're covered for the market you want to address?
Well, currently we're not looking at other brands. We find we've got enough on our plate at the moment in terms of these 5 brands, and we've got plenty of room for growth. We're not maxed out by any means. It's so we're not really looking at acquisitions. We're sort of flirting with the idea that maybe we wouldn't mind developing our own brand in-house, a more prestige brand, but currently there are no sort of major plans to develop any more brands.
Okay. Next up, a couple of questions about production. Are all your products made in China? I think you said they were. If so, is this not a potential risk? And then secondly, how flexible is the production to meet increased demands of sales growth?
Okay, so most of our products are made in China. Actually, I was asked this question at an interview a while ago and got told, I was asked what would happen if China invaded Taiwan, and I was quite flippant and said, well, if that happens, all bets are off. But of course, we have a plan. We have retailers, we have manufacturers we can use in Europe. We have manufacturers we can use in India and Turkey. So we do have a plan should that happen. I think it would be very uncomfortable, not just for us, but I think for a lot of manufacturers and retailers. And in terms of, what was the last bit of the question?
The next question is about how flexible is the production to meet increased demands of sales growth?
We use 25 plus factories, and we don't have a problem in terms of meeting demand. And the factories we use, a lot of them can make, we could, if we need to make a mascara and someone can only produce 100,000, they're all reformulated across a few factories. So we can produce, we've got plenty of flex to scale up if we need to.
Next question says, are the likes of Shein, Shine and Temu a competitive risk?
No, I don't feel they are. I mean, what we're selling is a brand. So you could ask that about, if we were just selling an unbranded product and we were producing something in China that we weren't promoting in the hope of selling it. But we're in Tesco, we're in Boots, we're in Superdrug, we're in CVS, we're now going into Walmart. So we're an established brand.
I had a question. It's about when you add a new retailer. How long do you get? I assume that shelf space is very, very competitive. Do you have a period to prove yourself? So something with like a Walmart, I assume they have sales expectations. How long do you get to shift enough units for them to feel confidently?
Most of the retailers, what they tend to do, because you're building these cabinets to put into their stores, and it's quite a laborious process. It takes a few months to build the cabinets, then you've got to put them in, you've got to do new line forms for 100 SKUs. So what the retailers tend to do, they start you off in a small way. So Tesco started, I mentioned, 50 stores, we're now in 1,400. Superdrug started off last year in 71 stores. They've now given us a further 60 stores with bigger units, and they've also upgraded the units we were in. We weren't expecting any more stores this year because they do a reset every few years, and Superdrug's reset is in 2025. So we were very surprised to get more stores. So the fact that we got more stores means the brand has worked. You usually get 2 or 3 years when they put you in with these cabinets, but they start small and they only roll you out if they're confident the brand is working. We've had the same thing with Boots. We started in 80 stores. They've just given us another 100. We started with CVS last year in 180. They've just given us another 379 or something. So wherever we've gone, we've managed to start small and grow the business.
And do you get in on one brand and then try and add further brands, or when you get in, are you in on 4 or 5 brands from the get-go?
It depends. Some brands we go in and we try to add further brands, and some brands we just go in. I mean, with Tesco, we gave them an exclusive for the W7 brand, so we haven't tried to introduce it into any of the other grocers. But we've got other brands that we just introduced into Morrison's, and we've got brands in Technic, in Asda. We've got another brand called Technic in Asda. So because we've got the few brands, we can move into different sectors.
Next question: have you ever, or are you legally challenged by premium brand owners, or are your products sufficiently distant to avoid litigation?
We have been challenged, but we have had letters. Never had any litigation in 20 years because we are sufficiently far away from what they do. There's nothing really legal they can do about it. This duping model is quite common. The big brands are all doing it to each other. We've never had any litigation in 20 years. We've had a letter and conversations, but no, nothing like that. We've never had to settle with anyone and pay any compensation.
And next question is about your marketing strategy. Do you use social media and influencers? You mentioned influencers are promoting the premium brands. Is that something you adopt as well?
We do it, yes, in a limited way. I mean, we're quite cute with how we do it. We don't believe some of the very expensive influencers bring anything to the brand, or as much as they should in terms of value. We will use micro influencers, up and coming influencers. The most important thing for us, they need to be influencers that people believe, not somebody necessarily that comes off of Love Island that will advertise dog food one day and water bottles the next day and breakfast cereal the next day. We're really quite cute with who we advertise with. In terms of our marketing, we haven't got a big marketing spend. It's 3% of what we do. We like the value and the disruptiveness to shout the brand out. We like to advertise in store. And that's how we promote our business, and we're growing. We've had some nice growth without breaking the bank.
And probably final one is about new markets. You showed on the slide there the potential in the current markets you're in. Are there any other markets you're not currently in that you'd like to approach, geographically speaking?
No, I mean, we don't mention all the markets we're in at the moment. We're in 550 stores in Australia. They're expanding into New Zealand. We're in Watson's in the Philippines. So, I mean, our big focus is the US and the UK, and that's not to say we're not, doing other things. At the back end of last year, we launched into 450 Ethos stores in Holland, sort of a Superdrug-esque type of store in Holland. We launched our Technic brand into another 250 stores, a group called Webra. So, we're expanding everywhere, but the real focus at the moment for us is the US and the UK, growing the business there, and we're already in a lot of the stores. There's built-in growth within the business with the retailers we're currently serving. I always say it takes a bit more time. You're not putting a can of baked beans on a shelf. You've got to build stands and organise it and get it all done.
Sam, it's been really interesting. Thank you very much indeed.
Thank you. Thanks for listening.